Hey, Dan Passarelli here. Well, the S&P 500 today was just about flat. Kind of a boring day, but still kind of a lot going on. Maybe a boring day superficially. Let's dig a little bit deeper here. If we take a look at the Qs, that is the QQQ Trust, which is for the NASDAQ. That made new highs today, new all-time highs. Pulled back a little bit to close, I think not at, well, pretty darn close to the all-time high we closed. Let's see here. Today's close was 541.16, and the next highest price was 5. Yeah, I guess we did close at an all-time high. But there's a couple of questions about that. Why has tech been so on fire lately? And even before we start thinking about answering that question, let's justify that question. So sure, we had a massive run up, about more than 25%, 30-some percent over the past not even 3 months. Importantly, we did that on pretty high volume. If you look at the volume graph right here compared to where it was the rest of the year, man, we've gotten a lot of volume, and that means conviction, which obviously you would expect with such a sharp increase, but it means conviction. Now, another thing from a technical standpoint, 3 days ago, we had what we call a golden cross. That's when the 50-day moving average crosses above the 200-day moving average. And we had that, and we had a nice big gap that took place yesterday's open. And today we just had some of that follow through. Now, let's back up a smidge. Gap, well, okay, here's a gap. And here's a gap, and actually, here's a gap. They say gaps are meant to be filled, and, well, usually they are. By that, I mean, it didn't trade at these prices. There's a gap between prices, so we expect a retracement to trade at the prices that didn't trade. Here, maybe here, I'd have a hard time believing here. This is sort of a whole anomaly little thing over here. Certainly here. Possibly here. That could indicate a bit of a retracement, but we have been seeing a lot of money flow into the NASDAQ. We see a lot of 13F information showing that some of the big dogs are buying up a lot of tech. Now, what does that mean if you are trading covered calls on your tech? It means probably the past 3 months has been pretty darn tough to manage those covered calls. We had a little bit of a nice half a month right here from the end of May to till a couple of days ago. But when we see these massive run-ups, that's when a lot of times the covered calls are best to be pulled back and to not sell those calls, because it's possible to end up leaving a lot on the table. Now, sometimes I don't mind that, but when we see some of these really big 25% moves in a big index, and some of the individual names we see 50%, 80%, over 100% moves during that time period, those are some of the moves that we don't want to miss out on. I hope that helps. This is Dan Passarelli, Trade Smart.